Thank you very much for being with us at a time when the consumer is very much front and center in our minds. And we're trying to work out how different companies are gauging where this consumer is at the moment. Earlier on, we heard from McDonald's, and they say maybe this consumer is slowing down. We heard a similar story from the likes of Nestle, from Pepsi too. In the companies that fall under your coverage, what do you see?
Hey, thanks for having me. Yeah, we're also seeing a slowdown in spending. I think what's a little funny, in my coverage, I cover a lot of big box retailers and packaged food companies. A lot of these retailers have been seeing a slowdown in spending for the past 2 years. But I think we're talking about it more now because you're also seeing weaker spending in the services side of the economy over the last say a few quarters or so. But really spending on goods has been soft for probably the last 2 years, especially spending on discretionary goods, especially those bigger ticket discretionary items. And now that we're seeing a softness in the services side of the economy, we are talking about the softening of the consumer a little bit more. But we're seeing the same things. Consumers are trading down. They're opting for cheaper private label brands. They're even opting out of certain categories. In some cases, they're just being very choiceful, discerning in their spending. But like I said, that's been the kind of the trend for the last year to 2 years now for at least the big box retailers.
Well, it certainly reminds me of the difficulties that the likes of Target had over the last couple of years. If I go through some of the other companies in your coverage, Amazon, Wal-Mart, Costco, when I hear trade down, a more choiceful consumer, I think Wal-Mart. Is that the winner in all of this?
Yeah, certainly. Walmart has been our top pick in the retail space for the last year and a half now. Walmart is gaining a significant amount of market share, not just in grocery, which is what they're predominantly known for, but also in their general merchandise categories. You don't really think about Walmart as being like an apparel retailer, a general merchandise retailer, but they're really growing out that general merchandise business, and predominantly because of their e-commerce platform is growing pretty significantly. They introduced a Walmart Plus subscription program. These are all high margin businesses for Walmart, and on top of that, Walmart's also growing out their advertising business, something that we don't really talk about a lot with retailers. But the advertising arm for many of these big box retailers are growing attractively, and that's a much higher margin business than selling core goods. And that's why I think that the stocks for a lot of these big box retailers are up, and I think a lot of it has to do with the fact that sales mix is changing, and they're not just being known for a goods retailer anymore. They're selling advertising, it's healthcare, it's financial services, and like I said, these are much higher margin businesses than goods.